market overall. You know, I was reading some commentary today that a lot of investors are actually starting to look overseas because they're not quite buying the U.S. rally.
Well, I think actually in the introduction you kind of said it all. The market's been strong for 4 or 5 weeks. We've really not seen any sort of pullback. You know, the world is sort of coming unglued a little bit around us. The market's never quite reacted to it. We've seen the softness in oil, in energy, which if you look at past sell-offs in the market, when the energy sector as a sector gets weak, the rest of the market is not usually far behind. Now, 2 days don't make a major sell-off, but clearly, you know, today's performance is sort of a knee-jerk reaction to yesterday, which was not so bad, but very flat. And there just doesn't, the feel-good factor just seems to have somehow dissipated from the market, at least for the moment.
All right, let's go over to the CME and Trent Wagner. Hey, you know what? One of the things we were watching with regards to commodities today, Trent, was actually milk prices. Milk prices have actually been jumping up, hitting new records. What's going on?
You know, I mean, it is crazy. I'm not really sure. We don't follow milk very closely just because the volume's gotten so low there over recent years. But considering how strong the dollar's been, any commodity that's rising is one to take notice of. When you have the dollar as strong as it is, it certainly is reigning supreme here today. We have pretty much every other major currency falling as it pairs up with the dollar. So if you have these commodities priced in dollar terms, it's something you certainly want to watch for. I think overall today what we've seen here, we have the Treasury rates down. I should say the rates are up, the bonds are down, and the equities are down. And we're trading under this notion that it seems as if people think these rates are going to rise sooner rather than later based on that report from the San Francisco Fed yesterday. And I really just don't see it. I see other Fed members hinting at it, but I really don't see Yellen balking at all. And her communication, which is very deliberate, very measured, that they want to see some real improvements in specifically wages within the employment sector and housing as well before they raise rates. So I'm not buying into that narrative. I would certainly take advantage of the weakness in the equity markets today. Short-term traders that are looking to get in, this is a good spot to do it.
I don't know how many short-timers are actually out there trading today. Let's go to the NYMEX and Peter Amendio. Peter, what are you watching right over at the NYMEX? What's your top headline?
Well, the big thing is today is you had the Brent down almost 100 points, down a full $1, while the WTI held firm. And that could be because the Pony Express pipeline that was supposed to be commissioned real soon here failed its hydro testing yesterday, and that's 230 to 260,000 barrels a day, and now it's supposed to be delayed until November.
All right, guys, thank you very much. Appreciate your time on the floor show. As you can see, there is oil. We're going to keep a close eye, of course, on all the contracts for you as we move into the close, which is 16 minutes away. Guys, thank you. Closing bell coming up 16 minutes from now. All right.